Hi, good morning, everybody. This is Nicholas Teo from CMC Singapore. Um, Today, the 4th of August. In a few minutes' time, or rather about 8 minutes' time, we're going to be getting first read of the first of a few economic numbers that will be coming up from down under in Australia. Retail sales will be announced at 9:30 local time here in Singapore. Markets calling for 0.5% read, which is an improvement from the previous 0.3%. Now this is essentially, if it comes out, it's probably going to be a good number, and it's going to be a number that may see some bit of a reaction where the Aussie dollar is concerned. But if we go into the next few hours at 12:30, we're going to see the RBA announce their cash rate or their rate announcement down there. Markets calling for flat, no change, but obviously a lot of these commodity pairs have been hit quite hard. I mean, in view of an impending Fed hike and the strength of the US dollar also, and obviously the move down in commodities. But essentially, if I were to just pull this chart up, quite a few lines I know, but essentially when the Aussie broke that 76 level, it basically found that next support rather quickly at around 73. I mean, it's hugging this line down here, using this as a support and resistance for some time, and we may see this continue if no move on the RBA this afternoon is the result. Now, don't forget, every currency pair is affected by two key elements, not just the Aussie side of things, but also the US dollar side of things. Going into this Friday, we have the big US payroll numbers, and that could move the needle if this RBA announcement does not do anything. But anyway, certain things to look out for. If this 73 gets broken significantly or with strength and momentum, we can see once more actually a reasonably quick move to perhaps this next support at around the 71 cent level. Alternatively, if we see anything that can urge this thing to bounce off this significant slide since mid-May, then we can see that next resistance at this 76, which was once a key support level which held the Aussie for very much most of this year. Anyway, interesting trigger points for anybody to trade off. Now, where indices are concerned, the SPX, or rather the S&P, it's something which I've talked about, and this is maybe an old picture, but we see a bit of a development down here over the last 3, 4, 5 days or so. I've mentioned the fact that this has been rather nervous sort of rally. Every time it goes into a new high, it gets reversed. Sellers keep coming out as new high is reached, which clearly shows, well, not clearly, nothing is clear now at this point in time, but it also suggests that it's nervous about going into any new high, and there are more sellers emerging every time you get a new reason to sell or a new level to sell. Now this slide down here, after these 3 days of green candles, have been once again met by a similar slide per se. It'll be interesting to see if this gets tested. If so, and broken, we may see a faster move down here. Likewise, I've mentioned this before, if we get a nice move up and break up above the 2136 level as indicated here, we could see this whole continuation run take place. But let's look at the fundamental side also. A lot of earnings have also been out, and they've not been flattering at all. In fact, a lot of the reaction for some of the company shares has actually been a sell down after earnings, purely because top line growth has been actually very dismal because of a few reasons. One, the US dollar strength preventing companies who traditional exporters not be able to repatriate and translate earnings back in. So those things are actually going to weigh on corporate earnings, or corporate earnings going to weigh on the market itself. Look at Apple, for example. Apple, something I flagged for some time actually, is a similar picture. It gets nervous, and it has been trading at this range for a long time. We've seen this big breakdown last night, trading in more or less a 1, 2, 3, 4, 5-month low. Now it's going to be interesting what happens from here, because traditionally when a low gets broken like this, you are going to bring in people stops coming into the market itself. Apple is a stock which I've argued that has been really crowded all the time, because everybody owns Apple, and they own a lot of Apple for that matter. Now to call a sell on Apple is actually sticking your neck out, really. But essentially, if everybody owns Apple, and there's no real, positive outlook, or increasingly positive outlook as the market is increasingly demanding from Apple, then we may see further downside down here. But interestingly, Apple has a very strong buyback program. They've got 170 billion in cash, and they could come in to actually buy things up. But it's something which I flagged previously. I just wanted to follow up on that. Meanwhile, on Singapore, Keppel, not to be confused with the earlier Apple, is continually being sold down. A new low down here at 730, 734. I think that the selling has been more or less overdone, and we may get some sort of a rebound because it's testing the low end of this range, or the low end of the channel that we have seen down here. Likewise, Noble Group, we flagged yesterday, is up, early indication testing 50 cents. I think the rebound for the stock maybe looks reasonably intact in view of the announcements yesterday, or the revelations yesterday. We wrote about this. We see this green candle above yesterday's high, doji high, or well, similar doji high. I think it's a good sign that that the rebound may continue. Whether it will push on to test these sort of levels of 60 cents remains to be seen. A lot of factors in view, because next week we got results for the company coming through. So we could see this thing push towards these sort of levels once more. Again, downside would be this low. Finally, something which I have not really spoke about in recent times, the Chinese markets, A50s. The reason why I've not been talking about them purely because I think they need to go through a period of sort of flatlining, adjustment, calmness. And the last 3-4 days of trading, we have maybe managed to see that. I still maintain my view that this low of around 10,000 or so, after the big initial sell down in the early part of July, remains to be actually quite a solid sort of support. Now, it will be truly interesting to see where it goes from here. If we can break out from this, let me just bring this arrow up. If we can break up from this sort of a range down here, maybe I'll draw the line instead. Okay, then I think maybe we can set things up for maybe a better rebound. But clearly, any strong rebound down here will be met by sellers purely because the margin unwind is still taking place. So my advice has been to actually move on to look at some of the or most of the many more products that we have on our platform. But anyway, well, since we still have you, well, it's a great number, 0.7% on the retail sales. It's a good number. We probably would see some bit of a movement here on the Aussie dollar. Just for interest, let me just pull this up. Yep, we're seeing this green spike up. Again, lots of data points through the day. We've got an RBA meeting later. This thing could end lower, and then we've got the Fed payroll numbers. The US payroll numbers later on this week. But anyway, just a few thoughts for you in this early trade Tuesday morning. Thank you very much.